Hello and welcome to FinTech Diary. The world of FinTech is evolving constantly, and we at FinTech Diary try to map these trends for you. My name is Amol Dethe, and my guest for this chapter is Amrish Rau, the CEO of Pine Labs. Pine Labs is a FinTech company valued at around $5 billion. Pine Labs is the oldest FinTech company, we must say, and Asia's leading merchant commerce platform offering various digital solutions and expanding in Asia rapidly. Must say, Amrish is a celebrity name in the FinTech space with 63,000 followers on LinkedIn and 36,000 plus on Twitter. Amrish, glad to have you.
Thank you very much, Amol. Appreciate you bringing me to the show.
Thank you. Thank you so much, Amrish. So before I begin, I have a very important and a soft question to you. You must have been to the Indian markets. You must have been to the shopping malls. How did you feel when you saw the POS machine of Pine Labs?
It's a great feeling. And considering I travel quite a bit, the best thing which happens is when you enter into India, right at the duty-free shops, you have the Pine Labs machine out there. I do make it a point to stop, ask them, everything's okay, transactions are running fine. So yeah, that's quite a proud moment to see the Pine Labs device there. What I'm also getting to see is a lot of my friends, when they come into India and they travel to various parts of the country, go to malls, and they get to see Pine Labs device everywhere, they tend to write back to me and say, hey, I used your Pine Labs machine today. It's just a proud feeling for all of us.
Oh, interesting. That's very interesting, Amrish. So one more, again, a soft question before we get into some specific. How's life in Singapore? Because you, I think, shifted to Singapore maybe 1.5 years back. Are Singapore merchants also actively using POS machines? Did you manage to spread Pine Labs there very aggressively?
So, about 80 to 85% of my revenue still comes out of India. But what we've done is we've now gone ahead and created 3 outposts. One is in Malaysia, second is Singapore, and third is UAE. The way I see this is the technology that we built in India, it is A, transportable, B, very relevant to some of these other markets. So other markets where, QR is taking off, touchless transactions are taking off. Our technology is best suited for all of that. And we are getting to see almost, as I said, 15 to 20% of my revenues come out of global markets. So yeah, I'm proud to say that there is a decent presence of Singapore, decent presence of Pine Labs and the group companies in Singapore.
Noted, Amrish. So let me get into a little specifics and get me some sense on the Pine Labs and the revenue stream as a whole. So give me some sense on the landscape of Pine Labs as a whole, on the volume of your transactions, on maybe on a daily or a monthly or a weekly basis. And what we learn is, Pine Lab is offering 360-degree payment solutions with various products. So also, if you could add the breakup in terms of revenue, what gives you the more in terms of your products like payments, pay later, loyalty, working capital? Which product is adding more to the revenue, Amrish?
Sure. See, the way I look at it is we are a fintech and we want to build a world-class fintech coming out of India and Southeast Asia. And for doing that, we feel that we have to be in the various parts of the fintech value chain. And if you see how we've been growing organically and inorganically, we've been building capabilities right across the spectrum of the fintech industry. So we've got an acquiring business. We've got an issuance business. We also do online payments. Obviously, offline payments we are very well known for. We are also focusing heavily into what drives commerce and consumption at the point of purchase. And that's where we see our pay later services becoming extremely relevant to the merchant base. Now, while payments is extremely important, what I'm also getting to see a trend around the world is, along with payments comes in this entire component around data. So for me to complete the fintech offering, we want to be a payments plus data entity. And that's where we went ahead and acquired this company called Setu about 12 months back, which gives me lots of capabilities in the data space and also in terms of creating new age APIs. So we are on our path to build out a fairly broad fintech play, and we've got the necessary components for that in place today. As a company, we continue to grow at about 30 to 40% year on year. I think I've publicly spoken about this, that somewhere this year, we will get to almost like $300 million of net revenues and not gross revenues to a net revenue level. For a long period of time, we have been an EBITDA positive company, and that profile will continue to just improve over the next few years. So the way I look at it is very strong presence today in the core areas of fintech, but we are not satisfied. We want to continue to build out very strong presence in India, not satisfied with it. We want to build out in the global markets also.
Sure. But again, POS payments is a big business. We understand you are quite say to, but if you could add more in terms of how are the other products pairing up? Because we can see, the POS machines everywhere. Most of the shops and most of the merchants are using it. But how has been the other products, shaping it up?
So less than 50% of my revenues actually comes out of the POS business today. We do a significant volumes when it comes to even online payments. So, online payments, by the end of this year, we'll almost get to about $20 billion of online payment volumes in India. We do a lot of work with banks and financial institutions when it comes to the issuing side of the business. That issuing side of the business is almost getting to be about 20% of our overall revenues. And then obviously, then you have this whole API and software-based revenues, which is still extremely small today. But I do see that the future is going to be largely around online payments and data capabilities that we will be taking out into the market.
So you expect your API and software-based revenue will go up?
And it has already actually gone up 3x in the last, I would say 15 months time.
Okay. Noted your point. So like sometime back, you said you will be, $300 million revenue. Net revenue, in fact, you have been consistently EBITDA positive. In fact, I remember in the print version of our website, ET Print, you already said 2 months back that, you are EBITDA positive and you will continue with the same. And you would have been, PAT positive now by currently, if you had not been that acquisition or something like that. But Amrish, I still would like you to tell us, because that's a big question now every fintech is grappling with. Is becoming PAT positive a big challenge for a fintech companies?
So look, one thing which you have to understand in India is still in an infrastructure build when it comes to banking services and payment services. And hence what happens is your abilities to make money is very limited, especially when you're in an infra build side. So one of the approaches what we've said that while the country is in the infra build, we want to gain market share, we want to protect market share depending on which business you are looking at. However, for us to generate significant PAT in the short term, we have to do a lot more on top of the infra. And that's where, as I'm saying, capability around data, capability around commerce, capability about bringing consumers into the store. All of these areas is where you can actually end up generating revenues and try and become more PAT positive. One of the areas that we have very clearly not gone into is on the lending space. So lending is something which I've tried to stay away from.
Any specific reason, Amrish? Because that's a very bold statement, because every fintech wants to jump on the lending bandwagon actually.
See, look, I don't have any comments about others who are playing in the lending space, but the way I look at it is that there are two things which bothers me, right? One, lending is a very nuanced area, and you really need to be an expert to be in the lending space. And as a CEO, I need to almost contribute 50 to 60% of my time trying to build out a lending book. And today I feel that there are many interesting areas in the payment space where I want to put my personal time into. And hence, I don't think so I'll be able to give 50% of my time to the lending space today. So that's point number one. Point number two is, in the lending space today, when it comes to a fine priced product to an A category merchant or business, I think there are enough and more solutions available, and it is a crowded market when it comes to optionality when it comes to banks and financial institutions. There is another segment out there which is new to credit. The data associated with that merchant and the business is relatively poor. And there what you end up doing is running a business at a very high APR or interest rates. And that's a model which I don't like, to be honest. I truly believe that to help businesses, you can't really come up with a lending product which is extremely high priced. And that doesn't gel with me. And that's the reason why I'm not comfortable to get into lending at this point of time.
A very realistic and a relevant explanation, which I'm sure the fintechs who are watching this show will certainly take some notes from you.
Yeah, I mean, one of my biggest worries right now in the market is there are far too many fintech credit plays which are charging 40%, 50% to consumers and merchants. And I think that's an unsustainable business model, if you ask me.
Yes. And that's where, in fact, the Reserve Bank of India, or the regulator, also became active because of certain practices were happening in the BNPL and the
Correct
side. So, noted your points, Amrish. Broadly, as a not as a journalist, but even as a customer, when I look at top fintech companies, I think everybody is offering almost everything: the data, the commerce, and the commercials in and around that, which you mentioned, Amrish. Most of the fintech players are offering the same thing, except those who are into lending space. Has the market become very competitive for fintechs already?
The answer to it is yes and no. Yes, it has become very competitive when it comes to B2C plays and consumer-led plays. Because what is happening is there is a need to incentivize the consumer to change the consumer's behavior. I.e., what that means is you need to burn significant amount of money. And just where the markets are and the liquidity position around the world, it's not very easy to go ahead and raise money and then to fund plays on the consumer side. On the B2B side, I think it is relatively easy. And I say relatively easy is because you still need to be a tech first and the most rugged tech platform to run a B2B business and run it successfully. And there are not many companies who've been able to run B2B businesses at 99.99% uptime for a long period of time. We as Pine Lab has the experience of having built out technology platforms for 15 years, wherein we built one of the most rugged platforms anywhere in the world. And we do believe that merchants do respect the fact that our systems simply just don't go down.
So when we speak about the competition, the one challenge that we have been seeing now is because a lot of fintech are offering the similar products. And there was a hope that a couple of fintechs will become profitable or they will have a significant number of customers or retainers, which didn't happen according to the investors. And, we have landed up in a different soup altogether. So funding winter is quite shivering to a lot of fintechs on one side. I would like you to tell us, how do you see the whole the funding winter right now? And also, what is the way out of this particular situation now?
I think there is no denying the fact that today the liquidity situation is extremely tight and hence access to easy money is difficult and hence access to money for high risk assets is difficult. Clearly, startups fall into the high risk category and hence funding to startups will slow down or has slowed down over the last 12 months period. And that is to be expected, to be honest. Now, what is happening is if you have a business which has a very strong product market fit, then I think you have an opportunity to absolutely break out of the pack and go forward. At the same time, if your product market fit was poor and you were dependent on funding to grow your business, I think you're absolutely going to struggle out there. And hence businesses need to be very careful to go after ideas which are extremely relevant, something which the market requires. You have a capabilities to deliver for it. And then you're not just dependent on funding to try and drive consumer usage or customer usage.
But any thoughts in terms of how long this winter will continue? What impact will it bring on the ecosystem? Do you think that gone are all those days where the easy money was there, or maybe access to fund was quite easy? You will get the funds even before even developing the product. Do you think that all those days are gone now?
Instead of looking at it that way, the way I would look at it is that earlier, if you have an idea and you have a good pedigree, it would be very easy to go and get funding in the market. Now people are looking at it differently. I run a fund along with my co-founder Jitendra Gupta and Shweta Rao also. And in that fund, for example, we have ourselves changed our thesis about who we believe is an entity that we would like to fund through this white venture capital. And the big change that we made is that it's no more about just the pedigree and the idea, but do you believe that the founder set have the capabilities to create a good product, achieve product market fit, and then most importantly, be in a position to go ahead and raise the next round. So this current scenario has made it a lot more difficult. Is there less money? I don't think so. I think there is enough money for Indian entrepreneurs and Indian startup space. It really comes down to, can you execute to that idea and create product market fit?
Noted your points. One more related question here, Amrish, is a lot of investments and research firms have slashed the valuations of top fintech companies, including the listed companies as well, and including Pine Labs. If I ask specifically for Pine Labs, what kind of impact do you see of this valuation slashed by the investments? When you go ahead with the markets, you must be meeting the investors, you must be checking the valuations of your company. Do you see a major impact of such things?
So let me first of all explain to you what happens with investors and when they value a company. There are 2 or 3 different types of investors, but let me focus on the 2 extreme ends of it. One is a public market investor with a public market fund, and then the other side is, let's say, a VC. A public market investor with a public market fund has to explain and let know the NAV of that fund, and hence it has to very clearly identify how they are marking each of their investments. On the other hand, there are VCs who don't need to publicly inform how they are valuing an asset within their books. Today, for example, in the case of Pine Labs, I haven't seen a downward revision of valuation from any of my investors save one. And that one investor is an investor called Neuberger, which has about 0.1% or 0.2% holding in the company. I think it was like a $10 million check out of the 1.1 billion that we have raised, marquee name Neuberger. And I simply don't know their philosophy. Now, what happens in the public market investor cases, there are 2 or 3 types of public market investors. One, very conservative. What they try and do is where they entered, they keep the same valuation till the time they have exited. Second is somebody who goes and talks to the management on a quarterly basis, and based on what they talk to the management, they go ahead and reevaluate on a quarterly basis. So that's the second one which is out there. And then there is a third one, which is so conservative that they constantly want to suppress the valuation of non-public listed investments of theirs in their books. So we have a range of investors who have valued us in their books from as high as 5 billion to Neuberger, which is honestly a complete outlier, which is at about 3.1. Generally, we've got most of our investors valuing us at the point which they have entered into the company. So, this whole thing about, oh, investors are valuing you lower, I think that's just, a headline news material. The only reality is when you get a term sheet on the table, that's when you know your true value and true valuation.
Noted your points, Amrish, and thanks for that, interesting explanation here. So one more question I will ask you specifically about Pine Labs, and perhaps then I will move to one or two industry questions. And my question to you now is specifically about, what are the focus areas for, Pine Labs now? Are you going to focus on increasing your product base, think about the valuation, or focus more on PAT positive or become profitable? Obviously, we have already heard about your IPO, postpone and those plans, but if still there is any clarity, you can add that as well. So broadly, what are going to be your focus areas for next 3 to 5 years, Amrish?
As an operator who's been very well funded, you tend to spend less than 5% of your time thinking about when do we go out to IPO. 95%, 97% of your time is always about how do you build a new product, how do you grow your revenues, how do you grow your capabilities out there. And that's exactly how I run my business. Even more interestingly, my philosophy is don't look towards the output metrics, Focus on the input metric. So instead of looking at, am I going to become profitable or am I going to have a revenue growth of 30%? The way I look at it is, can I improve my onboarding process? Can I bring in a different kind of a customer base? Can I come up with a new offering which can create a entirely new line? Obviously, you have an understanding where it will come out on the other side, but you never run your business as output first. You always run your business input first.
Sure, noted your points, Amrish. So one question that more like a suggestion from you, because a lot of fintechs watch our show specifically from the startup ecosystem and all. What is your advice specifically to fintechs now? Should they, when it comes to achieving the next level or growing growing at a speed, should they scale up organically and focus, or they should focus on acquiring new startups, or continue to raise funds and build up on their own? What actually worked for you, and what do you think will work for the others as well?
See, one thing you have to do is you have to understand where the markets are, right? The markets are in a situation where there is clearly a crunch on funding. That's point number one. Second, you got to understand the regulatory landscape. The regulator is getting extremely active. The regulator wants to be very proactive when it comes to management of fintechs and the products that these fintechs are creating. And then third, and people talk less about it, one of the best growing fintechs in India is NPCI. So NPCI is constantly innovating, coming up with new ideas, new approaches. So as a fintech, you have pressure coming from all directions. I'm not talking just payments, but also in the broking space, also in the insurance space, in wealth management space, the regulators becoming extremely active. So what you really need to know is you need to be on the right side of the regulation, right side of the compliance, build business models where you really don't want to be on the front page of Economic Times. Build out businesses where you can say that it is squeaky clean. And in the fintech space, effectively we are dealing with trust and we are dealing with money. And the most important piece to it is that build something which lasts for a long period of time. So I would tell every fintech that, look, there is no shortcut to success. Maybe we went through a certain period where there was a shortcut to success, but in general, build for the long term, continue to follow the best practices, don't be on the wrong side of the regulator, and I think you'll come out okay on the other side.
So Amrish, while we understand that, majority of business still comes from your India, but it's good to see, Pine Labs setting up its shop and expanding rapidly into Asia. I would also like you to tell us, what are the opportunities that you see for Indian fintechs abroad, or specifically in Asia? Do you see the Asian market is also huge, and maybe Indian fintechs can, tap that very aggressive?
See, what has happened in India in the last 5 to 8 years' time is just phenomenal when it comes to acceptance of digital payments. And in that acceptance of digital payments, our Indian entrepreneurs have gone ahead and really tried out various techniques to bring consumers and merchants into the fold. And because of that, their platforms have also developed so many new functionalities which the world has not seen. So I truly believe that an Indian fintech can go global. The only negative aspect of it is that fintech is not something which is very easily transportable. What I mean by that is different markets have their own regulatory requirements. Sometimes there is a requirement of having platforms on soil and you can't process it outside of the country. So all of those nuances come into play. But in terms of functionality and capabilities and the ideas that you've generated in India, I think you can go and work in any part of the world and you'll be successful.
Quite interesting, Amrish, and I'm sure a lot of fintechs will tap that opportunity. But one more question specifically on the industry side, Amrish, now is considering the shivering funding winter, which many fintechs faced a lot of challenges with raising funds, considering the regulators are active, considering a lot of fintechs how made big losses specifically on the lending side and then didn't make money on the payment side as well. Do you see a consolidation happening very rapidly into the Indian fintech space? What kind of future do you see for top fintech companies in India, maybe for next 3 to 5 years, and where this whole consolidation rally will go?
I think consolidation, you have to remember one thing, consolidation or an M&A has to be done on the backs of a great team, growth momentum, or a product gap that you might have within your organization. if you can come up with, if you can identify a business which fits in 2 out of these 3, I think it becomes very interesting for you to consolidate. We as a company have been very, very active when it comes to acquisitions. We did almost 5 acquisitions over a period of time. We acquired Setu, we acquired a small company called QFix, we acquired Quicksilver over a period of time. And we've acquired a company called Saluto. So we've done a very good mix of organic growth and inorganic growth. Now, by the way, all the acquisitions that we have made are acquisitions where we have respectfully paid for the value of the business, because we believe in the first principle, which is that make an acquisition only if the team or the product can add something to your business. Don't make an acquisition because it is more people to be hired into the organization. And that's the approach which we have taken. You run with that approach, I do think there will be consolidation happening in the market.
Will you be open?
We are absolutely open. We are absolutely open.
Okay, are you talking to someone right now?
I mean, we are always talking, but there's nothing specific happening.
Okay, sure. It's always good to listen to you, Amrish, and I'm sure a lot of fintechs will take quite a good notes out of this conversation. Before I leave you, just tell me something, since the fintechs are creating a great innovation, and like I told you in the beginning that, how do you, like I asked you in the beginning, how do you feel about Pine Labs POS machines? I would also like you to tell us what actually motivates you to create this innovation, to create these products, and maybe have your meal in the evening and not even at a lunchtime.
Amol, I have to tell you this one, right? So I've been in this space for 26, 27 years. When I started my career in the payments and fintech space, everybody always used to threaten me saying cash will never go out of fashion. Electronic payments will never become successful. And then look, 25 years later, I get to see a time and day where every Indian is carrying a digital identity, is carrying a digital way of making payments. And digital payments has become a way of life. Somewhere there, I actually feel that I played a small role in that journey. Or forget that. Somewhere I feel that, look, I spent 25 years of my life in a sector where I could see transformation and I could see change. Right. So I feel super excited in what I do. Every day in the morning when I wake up, I feel I'm contributing something. And that just keeps me motivated and excited to keep doing this for many more years.
Remarkable thoughts, Amrish, and keep motivating yourself and others as well. Thanks for sharing your thoughts at FinTech Diary. It's always great chatting with you. Thank you so much for your time. And thanks for watching FinTech Diary, ladies and gentlemen.
Thank you very much.